This is Matthew Kratter from Trader University, and today I want to talk about the Bitcoin ETF, which looks like it's almost here. I think there's a really good chance we have this thing trading sometime next week. There have been a lot of hints of this coming. The SEC Investor Ed Twitter account just a couple days ago posted this investment warning. Before investing in a fund that holds Bitcoin futures contracts, make sure you carefully weigh the potential risks and benefits. This looks very much like a description of a futures-backed Bitcoin ETF. So we had this hint, and then yesterday, Bloomberg reporting that the SEC is not going to block Bitcoin futures ETFs from starting to trade next year. What a lot of people don't realize is that Bitcoin ETFs are not necessarily approved by the SEC, but they have to be run by the SEC, and then the SEC can decide whether to block them or not. There are two main ETFs it looks like are going to be released next week. Potential approval date of October 18th or October 19th. We have the Invesco and the ProShares, and the odds of these getting approved, according to Bloomberg Intelligence, are quite high. Bitcoin breaking out above 60,000 on this news. We're just within a hair's width of Bitcoin new all-time highs. And one reason this is happening, we first need to, I think, rewind and talk about what an ETF is. ETF is just an exchange-traded fund. It's a way of opening up a market to new investors and allowing you to trade something in your brokerage account that you wouldn't normally be able to trade. So an ETF, we have the SPY, the QQQs. These are examples of stock index ETFs. An ETF trades just like a stock. Like I said, you can buy or sell it in your brokerage account, but it's backed by or tracks something else. So the classic example of this is GLD, which is the gold ETF. It was launched in November. This should actually say November 2004, and we can see the performance following November 2004 really to 2011. So call it the next 7 years. This ETF went from somewhere around call it 443 all the way up to 181, and it's still trading higher than it was when it was released. Now it's important to realize though that the GLD is backed by, or supposedly backed by, actual physical gold. It's not backed by futures. We're going to talk about that in a minute. But in the meantime, if you're finding this video helpful so far, be sure to hit that subscribe and like button, and maybe share this video with a few friends who are interested in learning more about the Bitcoin ETF. So GLD is supposedly, at least according to their prospectus, backed by real gold bars. The problem with ETFs, of course, is you have these counterparty risk, these trust issues. When you buy GLD, you have to trust the company behind it that's managing the ETF. You also have to trust the custody that's holding the actual physical gold, and you have to trust the insurance company in case that gold gets stolen from the vaults, etc. So there's a lot of counterparty risk. There are a lot of trust issues involved. GLD has functioned fine. It's obviously provided good returns, but these are the issues always when you deal with an ETF. It's a little bit like owning your own house versus owning an ETF on real estate. There's a very big difference. Now, as we said, GLD buys spot gold, meaning gold bars, actual physical gold, not gold futures. But these Bitcoin ETFs that will start trading next week will be purchasing Bitcoin futures, which is an agreement to buy or sell futures, buy or sell Bitcoin at some point in the future. This is how futures work. And there are two basic types of Bitcoin futures that currently trade. There's the CME group, which has the largest volume, I believe. These are cash settled, so at the end of the contract, the buyer and the seller of the futures contract exchange cash. Then there's also the BOCT BTC futures, which are physically settled, where you actually need to deliver spot BTC, Bitcoin itself, to settle the contracts at expiration. If we take a look at the open interest, we see that the cash settled futures have much higher open interest, which just means they're more open contracts. When a buyer and a seller do a trade, this increases, or do a new trade. This increases the open interest of the contract. That's a little bit of a simplification, but we could talk more about that later. So we have the cash settled futures. We have the physically settled futures on BOCT, and I'm almost certain that these Bitcoin ETFs will trade based on the cash settled futures, simply because they require or they have more liquidity, more trading volume, more open interest. It looks like BACT also offers a cash settled futures contract, but they're more well known, and I think they have more liquidity in their physically settled futures contracts. So it goes without saying that smart people who have the ability to buy Bitcoin itself using Coinbase, using Strike, will buy Bitcoin rather than an ETF. An ETF is more for institutional investors that cannot buy Bitcoin itself because of their charters, because of their investment rules. It's also an ETF is also for people who just can't figure out how to open up a Coinbase account and just want to keep it really easy and want to be able to buy Bitcoin, for example, in their Schwab account or TD Ameritrade account or something like that. As we said, though, the real problem with ETFs, and we talk about this with Bitcoin, not your keys, not your coins. It's important to hold Bitcoin itself. If you hold a Bitcoin ETF in your brokerage account could be frozen. It could be that position could be just taken out or frozen by the government. It's very different when you own BTC itself. No one can freeze you out or freeze your account because there really are no accounts with Bitcoin. You hold your own private keys, and that allows you to move the Bitcoin or spend it whenever you need to. So this is the problem with ETFs, not just counterparty risk, not just the fees that they charge. There'll obviously be an annual management fee for this ETF, and we don't know how much that will be. For GBTC, which is not an ETF, but it's a trust that holds Bitcoin, the annual fees have been just outrageous. They've been 2%, so you're losing more than 20% over 10 years. But that's something that I don't see anyone talking about with a Bitcoin futures ETF is the tracking error and the negative carry that will be present, assuming the futures curve stays the same. So if we take a look at these settlement prices from the CME Group Bitcoin cash settled futures from yesterday, we're just going to look at settlement prices. The futures for delivery in November of 2021 were closed at or settled at 58,675. The front month, which is October 2021, they settled at 58,195. So if we just take the difference between these, and the reason I'm doing this is I want to calculate sort of the roll down negative carry. So if I buy these futures right here at 58,675, and let's say the price of Bitcoin doesn't move for the period of time that I'm invested, if the spot price is back at 58,195, when this becomes the front contract, it will trade very close to that. And so we'll basically bleed down from 58,675 down to 58,195. So if we calculate that and say that's approximately 1 month, and we multiply that by 12, we can see that this product will have a negative carry of 9.82% if Bitcoin doesn't move. If the futures curve goes into backwardation, then this will change. Now, obviously, I'm expecting Bitcoin to go up a lot. And so these sort of drags won't matter if Bitcoin continues to go up 200% a year. But something to keep in mind, if you're holding Bitcoin itself, you're not subject to these negative carry fees. These negative carry is a function of the shape of the futures curve. And no one really knows what the futures curve will look like over long periods of time, though it tends to have it tends to be upward sloping. So if we look here, we can see the front month is at 58,195. If we go out more than a year, it's at 61,705. This is called contango, and it just means the prices move higher as you go out of the curve. And what this means is if you're long the futures contract, you have this sort of negative carry, which will be carried through to the Bitcoin futures ETF. So you could have something like negative 10% negative carry, plus management fees, plus counterparty risk, all these things, which in my mind make it a very bad thing to hold, especially if you can figure out how to hold Bitcoin itself. Now, if you're able, as I said, don't buy the Bitcoin futures ETF when it comes out. Buy Bitcoin itself using Strike, using Coinbase, using one of these services. Again, that's not investment advice. That's just my 2 cents. Here's Strike. You can buy it on your phone using the Strike app. They usually start you off with pretty low trading limits or with deposit limits. You've got to ask them to keep increasing that. If you want to buy larger amounts, Coinbase is a way to do that. And then what you do after you've bought your BTC on Strike or Coinbase or Kraken or Gemini, really any of these will work. You withdraw it. You just click the withdraw button. and you pull it out and put it on Trezor or another hardware wallet, and this will store your private keys and allow you to keep your Bitcoin in cold storage for the long term. No management fees, no annual fees, no negative carry or anything like that. I go into these details in this video on YouTube, which I will link to below, how to buy and store Bitcoin the right way, where I show you how to buy it on Coinbase Pro. Again, I'm not being paid by any of these companies. I just used them in the past: Trezor, Coinbase Pro, Strike, etc. You can buy it on Coinbase Pro, withdraw it, hold it on a hardware wallet. In my advanced course on Bitcoin, I also show you how to buy Bitcoin outside of the normal exchanges, to how to buy Bitcoin completely anonymously, what we would call non-KYC Bitcoin, where you don't have to provide your address, your social security number, your tax information, your name, etc. And this is, I think, perhaps the best way to buy it. It's a little more difficult, which is why I've made so many lectures. Again, I had to put this behind a paywall because some of the stuff that I talk about is, let's just say, it's not stuff that I would want to put on YouTube. It's unclear, depending on the jurisdiction you're in, whether some of these techniques are legal. And so you have to be very careful and make sure you know the laws and you don't break any laws. But for those of you who are a little bit more advanced in Bitcoin and want to learn how to buy Bitcoin anonymously, check out the paid online courses. And you also get access when you buy that, when you get a 30-day membership, you'll get access to all of my online trading courses, as well as my favorite momentum stocks and my favorite long-term investments, which include a couple interesting plays on Bitcoin using Bitcoin options. So that's on the paid side of things. In the meantime, make sure you watch all my free stuff first and really benefit from that. There's the larger question of Bitcoin futures, Bitcoin ETF. Can this be used to manipulate Bitcoin to suppress the prices? There's a lot of talk about whether creating unbacked Bitcoin IOUs, the kind that trade, for example, in Robinhood, or futures, or an ETF backed by futures, will this be a way to suppress the price of Bitcoin? And it appears that something like this has been happening with gold for many years. There's been this kind of manipulation, not just the sort of manipulation that traders do, like the JP Morgan traders do short term, but also just creating a lot of gold paper that weighs down the price, and gold paper that's not really backed by gold. Now, I will note that something like this has not happened with the crude oil ETF. I believe it's USO, which itself is backed by crude oil futures. This has not been used to suppress the price of crude oil. Crude oil futures have not been used to, if the U.S. government could keep down oil prices, I'm sure it would. But I think the main difference here, and this is the one we're talking about, USO, which is an ETF that trades, that tries to track the price of oil, but it diverges simply because it's backed by the futures, and so you get a lot of the same negative carry issues. The one thing I would say, of course, is that crude oil is not a monetary good. It is crucial to the global financial system. It's the most important commodity, but unlike gold or Bitcoin, it's not really a monetary good. I explore some of these issues in this video that called Paper Bitcoin versus Paper Gold, and talking about how you can manipulate the price of things by issuing a lot of paper. I think the jury is still out on whether you can do this with Bitcoin. Obviously, Bitcoin is much easier to settle. It's much easier to verify. It's much easier to beam it around the world. And it's not all being held by central banks and governments, whereas the bulk of the world's gold is really already in government hands. So these are some key differences which I go into in this video. My biggest takeaway here, apart from the potential of price suppression, and I don't think it's a real risk, I think that the biggest takeaway here is that a new Bitcoin ETF, as we will almost certainly see next week, will massively increase the pool of potential buyers of Bitcoin. And it will now be easy for anyone with a brokerage account. You don't need a crypto exchange account. You can just use a regular brokerage account to get exposure to BTC. And a corollary of that is it'll now be really easy for financial advisors to recommend an allocation to BTC, maybe a small one, through the ETF. It's much more difficult for them, especially if they're on a certain platform, like a Schwab platform or something, to say, now go to Coinbase and buy some Bitcoin, if it's all within their same same account or the same platform, then they can get paid. They can still get paid their financial advisor 1% management fee or whatever. And it's also just very easy to tell you to buy it because it trades like a stock. So I would say that on the whole, a Bitcoin ETF, having it is massively, massively bullish for Bitcoin. It really will increase the pool of investors who can buy it. And I'm maintaining my target of $200,000 per Bitcoin by the end of this year. I think we're going to get there reasonably quickly, and we're certainly on our way today, trading right around 60,000. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.